Henry Santoli was on yesterday. The 300 calls on GameStop, 1 day to go, selling at 6. Think about that. It's 200 points out of the money. Not anymore. It's 108. But I don't know. That just kind of sums up the potential, the volatility, the quick moves. And my point was, I'd be scared to death of selling that call naked, even at 300, because I could end up, with a loss of 10 times my money in this environment. What does all that say about the?
And by the way, being scared to death is the emotion that you should convey to a lot of folks who are very enthusiastically jumping onto their speculation apps and playing this because it's a lot of fun and so forth. But what you just described is what gets people killed, which is taking a lot of risks that they don't even realize that they're taking. And I'm sure we'll have a great forensic analysis in a week or two as to what triggered this. I mean, the obvious explanation would be some folks on the short side decided it was safe to wade back into the water and just got killed. We shall see. But Joe, I have to say, and to Andrew, having lived through the 1990s, for the last 20 years, I have often been asked as we get into a speculative episode or around the edges, hey, is this like the 1990s? And right. Up until now, I've always had to say, no. Totally different order of what was happening. Now, I would say this is exactly like the late 1990s. The amount of just bananas speculation and the enthusiasm and the rage of the speculators against anybody that wants to tamp it down or urge conservatism or care or what have you is exactly like the 1990s. And I don't know when it's going to end. One of the big questions that I certainly have been asking people is, hey, is this late 1998? Mid-1999 or early 2000? And nobody knows the answer. But my guess is in a few years, we're going to look back at this as yet another one of the major historical speculative episodes.
Henry, the latest bump in the road has been the rise in the 10-year, and it hits tech right away. And that makes sense, obviously, when things are, for a lot of reasons. If the Fed were to eventually cut off the gravy train and valuations come down in higher rates. Others have said that doesn't change the future of any of these tech companies, that they're still going to just flourish. Could change the valuation of their stocks, though.
Yeah, and that's totally right. And it's an important thing to remember. And in the late 1990s, that's what everybody said. And certainly I was saying that. Listen, the internet is going to change the world, and it is going to create huge and amazing businesses, and it is going to destroy a lot of traditional businesses. All of that happened. And in fact, it happened way beyond what even the most enthusiastic people were thinking in the late 1990s. And yet, from 2000 to 2002, most of the tech stocks still got absolutely obliterated. And so that is the point that I would urge people to look when they look at history, which is that you can be completely right on the profoundness of the fundamental trend and still get at least temporarily killed in stocks.
Becky,
having said that, I will say, Joe, one thing that's important and very interesting is a lot of the big tech names are actually not that crazy. You look at Microsoft, right. You look at Apple,
right,
30
that's what's
30
different.
Plus PEs.
Right, that's what's different from the zero earnings back when you were. So, Becky, you got a question, but then I want to get back to Henry about something else because I need him to answer something. So you go ahead, Becky. So just get ready, Blodget.
Henry, the idea that you said that this is the first time we look like the 1990s again, that made me literally sit up in my chair and kind of pay attention and take notice. That went on for several years, went on for a long time. The people were still dancing. You got to make money while that's still happening. But, and I hate this time maybe different type of questions, but let me just ask this. This time, what we keep hearing from people is the reason it's not as big of a problem as it was back in the 1990s is because this is affecting a smaller part of the market. This is just speculative areas, not the entire market being led by this. What do you think, having lived through that and having looked at this?
I think that that's just yet another story that we are telling ourselves to make ourselves feel better, that we're on more solid ground. And there were a lot of those stories in the 1990s, too, starting with the internet story. The internet has been extraordinarily powerful and profound, and it's created these amazing companies. So we were dead right about that. But again, the market in the interim was tough. And so what I would say is there is just absolutely bananas crazy speculation in a lot of different areas, certainly in the SPACs, certainly in a lot of the tech companies that are currently way not profitable and won't be for a long time, and other areas. So there's that at the margin. But then also the entire market is actually at an extreme level relative to all history, including 2000. And that's because of interest rates, but those also can change.
Don't. Shepard Smith here. Thanks for watching CNBC on YouTube.